Reserve Bank's first Monetary Policy Board meeting of the year begins in just 2 weeks, and according to the London Stock Exchange, money markets are allocating a 25% chance to rates being lifted to 3.85%. But some economists believe rates will be rising next month, including Warren Hogan, who joins me now. Warren, what signs are you seeing out there that are telling you that rates need to be higher in Australia?
Yeah, g'day, Ed. Look, over the last few weeks, we've had some pretty compelling new information on the economy that adds to what now is about 6 months of data that tells us that the low point in inflation was about 6 months ago, and the low point in economic activity or economic growth was about a year ago. And last week was really the sort of big number around consumer spending. It was for November. It's the new household spending indicator. It replaces the old retail sales report. It was up 1% after rising a revised 1.4 in October. So those first 2 months of the final quarter of the year are super, super strong. In fact, the strongest consumer spending outside the pandemic for over a decade, and really confirms that the economy is picking up, inflation's picking up, and of course, that probably is the signal that the interest rate's not at the right level. And I think the RBA's got to get on with it.
So spending picking up in November, does that suggest spending could be higher in December as well? And that obviously adds to inflation, because we did see the inflation numbers came out about a week and a half, 2 weeks ago, showing trim mean inflation has fallen slightly as well during the month of November. So we've got trim mean inflation back to 3.2%, I think, which would hopefully be a good thing in the RBA's eyes.
Yeah, so we got the new monthly inflation numbers, and we got that November figure a couple of weeks ago. And, we've got to be careful with the month-to-month data. The RBA certainly has been warning us about this. The bottom line is whether you have 3.3 core inflation from October or 3.2 from November, those readings are all well above the low point from the middle of last year, which is around 2.8, 2.9. So they're telling us that inflation has turned, and the degree to which it's starting to move away from the RBA's target and become a real problem for, consumers, cost of living, and of course the RBA themselves, I think, is the only ambiguity. So the momentum in the economy is really clear. So back in August, when the RBA last cut rates, they expected consumer spending in 2025 to grow by about 2%. We now have confirmation that even a soft month in December, the numbers are still going to be up 3% for the year. So their forecast has been massively exceeded on both growth, consumer spending, and inflation. So that it's all telling us that the economy is a lot stronger than they thought when they were cutting rates. And of course, inflation above the band means that they probably have to start hiking again.
And do you think is it just as simple as one hike, or does it need to be more than that?
Well, the reality is that the peak from 2024, early 25 of 4.35% cash rate did not get the job done. It didn't get inflation back to target of 2.5%. And most importantly, it's not keeping it there. So I think they at the very least have to reverse the rate cuts that we saw last year. Beyond that, we'll have to wait and see, but that needs to be their first objective. Assuming that the world doesn't suddenly fall in a hole, which it certainly doesn't look that way. Most economies around the world are still performing very well. Inflation's still high in most places. And of course, that's a backdrop that makes the RBA, I think, would make the RBA very uncomfortable with what we're seeing with the Aussie data, which is generally coming in stronger than expected.
And the data we get this week on Thursday, unemployment rate numbers, it's currently 4.3%. We'll get December. Are you expecting that to rise a little bit, or?
Look, it's really a volatile number, and it's on a slight upward trend, but it's essentially at a rate 4.3 that's around full employment, or our best guess of what it is. So I'm not sure that this number can really turn the dial. Obviously, if it's really soft and unemployment suddenly spikes, there'll be people saying that they can't hike rates. Let's wait and see. I doubt that's the case. Forward indicators like last week's job vacancies data shows there's a lot of demand for labour out there. It's just the problem we've got is, have we got the right skills sitting there for the jobs of the future? And of course, there's this risk that we do lose some jobs with new technology coming in before we replace them. So we'll watch the data closely. I don't think it's going to get in the way of a rate hike next week.
Warren Hogan, thanks for coming on the show.
Thanks, Ed.